I still think risk adjusted, ETH will do extremely well over time. Just because, the reason why it's expensive to use is because it's so damn popular. And so, it's like a chain of prestige now for things to be built on, because it is the more decentralized of all of the other layer ones. So it makes sense to me. I think with the change towards ETH 2.0 coming as well, I think that narrative will build over time as well. So I still think the upside in ETH is massive. In terms of market cap, where could it go? It can go another 10x from here in terms of market cap alone. Over what period of time? Who knows? I mean, I got the last quarter wrong last year, so who am I to be the right person to get it this one right? My guess, I still think higher. I still think we actually got a strong run to come. I think this kind of year-long sideways correction that we've essentially had is just a springing board to further gains as more adoption rolls out, more use cases roll out, etc. So the other layer ones may well outperform, but you have more risk in them. So we've seen, for example, Solana got tested over this recent sell-off, and the chain's still a bit clunky. It has its own set of problems. And all of these come with different sets of problems. But in the right market, because they're seeing earlier adoption, the rate of change goes up faster. So from going from 1 billion to 2 billion is much easier than going from 10 billion to 20 billion or 300 billion to 600 billion. So rate of change terms, they can perform very well, but they're riskier. So ETH has that balance of being more risky than Bitcoin because it's less decentralized, as we talked about before, less pure, but it still has the massive network adoption that we're looking for, which is the thing that drives prices. And network adoption is just not people buying it, it's people using it and applications being built on it. It's how you connect all the people on the network. And ETH is still far superior than anything else, but these others are coming up from a lower base. So it's that balance of risk reward. I mean, there will be lots of times you'll have FOMO if you own ETH because something else will do a lot better. Now, that's what the Bitcoin investors will say too, is, okay, fine, other chains may outperform, but we're happy with the security and the safety of owning Bitcoin, and that's fine too. There's always a risk curve somewhere. Now, and ETH won't remain the greatest trade forever. Don't forget, I bought ETH, I don't even remember what price, it was a long way ago and a lot lower. So, that's proven itself out. It did 500% last year or 480%. So, you don't have to reprove the trade every year now from my entry price. Will I trade out of ETH into something else? For sure. When? No idea. Or will I just add other tokens, protocols, opportunities, and just keep my ETH holding? I really don't know. I keep it fluid. Unless I see something that fundamentally seems wrong. Maybe the sharding on ETH allows for breakages that we didn't perceive, and it becomes more difficult to use when you go to ETH 2.0 and it takes a while to get it right. Well, maybe things move to other chains for a while, and that's fine too. So it's not a crusade for me. It's a opportunistic investment. I think it's a long-term investment. I don't really think, I've already been in the trade for well over a year. Am I likely to be in the trade for the next 3 years? Most likely. Could I sell out of half of it if ETH's trading at 20K? For sure. Just understanding risk, right? Hedge funds don't think this token is going to make me rich. They're going to think, okay, what's riskier here? How do I want to construct a portfolio so I can be in this for the time horizon I want to be in? I understand there's a philosophy to the space, and people want there to be, Bitcoin at the base center of money, and that may end up playing out over time. But my job is as an investor, not a philosopher. And my job as an investor is to look for better returns. So a long time ago, about a year and a half ago, I switched most of my Bitcoin holdings into ETH, and then I bought a basket of alts to get different exposure to different parts of the market, because you don't really know what's going to get traction and what's not. So over time, I continued to reallocate my Bitcoin into ETH. I always wanted to keep a bit of Bitcoin because you want to, cheer for the team as well. But also, the thing that I get Bitcoin maxes hate me for is like, this is a network and a community. if you are fundamentally awful to people joining your community, people want to leave. And that's just a matter of fact. And if you get picked on every time you say anything that could possibly be perceived as anything negative on Bitcoin, then you, after a while, you think, why even bother? Now, you bother if it was outperforming, but it's not. And I think the network growth in Bitcoin has been slower than people have expected, and this is one of the reasons. I mean, institutions just don't like this kind of stuff. The toxicity that can exist. I mean, there's tons of good people in Bitcoin, and I understand the philosophy, and if that's your point of view on the philosophy, great. But don't attack other people, because then it becomes like a religion, and they become exclusive and not inclusive if you're not careful. And that's the issue I had. So I always want to retain some Bitcoin, but it's not going to be my core holding unless I think it's going to outperform, which I don't think it will. I think there's a number of factors at play. I think the main factor is, if you think of the marginal investor in Bitcoin, the average person, the adoption, right? Those people have seen prices rise 10% in terms of their everyday cost of living, but the wages haven't gone up that much. So what you've taken is marginal consumption away, or their ability to invest, stick a few more dollars into Bitcoin. That has left the market. We've seen network growth slow down. The other thing that happened was obviously the Chinese left the market. And so that's left the market in a slightly less stable way, because you've taken out a whole bunch of demand. Now, there are plenty of Chinese still in the market, but you took out a lot of that. So with those two factors, and then kind of the overall sort of fear of the tightening of monetary policy and what that could do to other financial markets, if you think there's new participants in this now, there's people like hedge funds, and if they're, one portfolio is blowing up, they end up having to reduce risk elsewhere. So everything starts becoming a bit correlated. So I think those were the primary drivers behind what's been going on. It's probably from the macro investing side, because that gives you a framework of understanding, and it allows me to filter out the noise, because so many people get lost in the noise of the space. We've just seen this massive sell-off, everybody's freaking out, and they just don't step back enough to go, well, what was my original hypothesis? Is a 50% drawdown within that hypothesis or not? And when they go, well, yeah, we kind of expect it happens every year, so then stop freaking out about it. I mean, it's like monkeys flinging poo online now. Everyone's throwing poo at each other. They all hate each other. Everyone's calling each other out for a bad call they made in the past, or some reading of the on-chain analysis. It's ridiculous. I don't think it's going to be as much retail adoption. I think that moves elsewhere within the crypto Web3 kind of world. I think it's actually going to be driven by sovereign wealth funds, large asset allocation, stuff of that type. I think we're only just starting to see that.